Oh man, that is some good stuff. That is some good stuff. Fire up some tunes, please. All right. This is from Autumn to Ashes, The Fiction We Live, 2003, featuring a very underrated song, Autumn's. Well, we'll get to it. We'll get it. It's fantastic. Anyway, here we go. It is a little bit early for the Daily Candle, but I wanted to hop on and take a look at a few things. I might not be around in an hour for the Daily Candle close, so I did want to get something out there and just take a look at a few things. What's happening right now in the crypto world? Currently looking at on the screen, four-way shot, Bitcoin monthly, weekly, daily, 4-hour. Nothing of significant importance here. We're in a range. We have been in the range for a handful of days, almost a week now since entering the range. We've tested the upside of the range, not so much the downside of the range in the last few days. So that being said, you can see that right here. All right, so on the upside of the range, you know, 36.93 is what I have over here. This is embarrassing. Yeah, I need my cursor. I need it back. Things are running a little slow at the present moment, so bear with me. We're gonna struggle through this puppy together. And for anybody watching later than right now, as it's live, then well, you'll probably see the struggle. I'm guessing. And I apologize. Things will get better when funds permit. You know, we'll get ourselves a dedicated PC or something, some type of server that can run all this stuff. But you don't need to be bored with all of that information. Let's get back to the charts if I can get my cursor working, which is kind of important to show things to people. Here we go. All right, there it is. All right, so the upper portion of this range, ballpark, let's say 37.13. Bottom portion around 36.75. Just for that zone, the bottom portion of the range starting around 35. Well, 35.05 was a major level. And let's see, we got it down to basically the wick of that candle. So 34.73, 34.79 ballpark. Anyway, the important thing to realize is not much is going on inside of that time. This is the breakdown on the 4-hour window. You can see that there's not a whole lot happening here. You had sideways to a dump, sideways to a pump, sideways and a slow bleed to sideways. Okay, that's where we are right now, and that's kind of it. We'll pull up a different look at things over here. Now, we talked about the bullish Gartley. I'm going to show that on a different. I'm going to show that on a different layout. But for now, this one is EMAs and SMAs. We go blue, orange, green, brown. Blue, orange, green, brown, slate white, red, yellow. And that would be 8, 13, 21, 55, 100, 200, 500, 700. What we're seeing right now is blue crossing over green. Orange is still up above, so that's acting as resistance. Well, they're all three are acting as resistance on the current 4-hour chart. All right, so we could see where when all three were resistance prior, you know, it was all sideways and then down. During the pump is the only time we were able to get up over those three. Stayed over those three. Now you start getting into order here. Blue, which would be nice, and then orange, and then green following suit. Weren't able to do that. It already came down to the point where orange just wasn't able to come up. So orange is the 13, well, no, 4-hour period. So 13 4-hour MA, and it just wasn't able to do it. Another cross here on the bearish side, ended up pushing this down a little bit. So, you know, it's not great as far as major moves we're looking. I just kind of see continuation of the sideways action here. Volume is the orange line here is the moving average for the orange. Sort of gives you an idea of basically like average volume. That being said, the spikes that have occurred have all been bearish candles, except for these two here, and they were during that monster candle, right? So, you know, $137 candle, almost 4% on the plus side, and that's pretty impressive. But we got that a few days ago, so not much since you know, at this point, you almost wake down to give it all back. But that was bought up pretty quickly. And even though it's a bearish candle, the volume... Sorry about that. The volume was higher. And a lot of that volume is the transactions it took to buy all this up. You know, absorb the rest of the bleeding and buy it up to the extent where not only did you stop the bleeding, you were able to push it back up. And that's how you printed this big wick. This should have been cause for some type of bullish behavior. We didn't really get too much. You got a little bit of a candle here. You gave it all right back on the next candle, the next 4-hour period. And then you got a good candle. So this candle here could have been bullish engulfing candle. Basically got a tweezer bottom as well. It's a little hard to say that this is a legitimate downtrend. Sure, it is consistently going down. If we were to throw that on a 30-minute chart, then yeah, it would look a little bit more solid. Otherwise, this is a decent pullback. You know, from the low down here to this area here, really not overly, not overly upset about this. Let's say we went wick to wick, and let's get an idea. Full price action, beginning to end. Let's see, up, down. So 786. I mean, it's a pretty good retracement. Body wise, you're looking 618. Candle closed right before hitting the 618. So no further than a 61.8% retracement from this low to this high. So you could start looking for patterns within here. You can start looking for ABCDs, advanced ABCDs, crabs, gartleys, bats, butterflies, all that pretty stuff. Let's keep it rolling here. Let's see what okay. So on the 1-hour chart, again we had our resistance zone and our support zone down here. Please clear. Come on, buddy. There you go. We had this range that we drew once we started trading a little bit after that second dump. Remember, this was 2 of 2 over here. We were able to get a range that kind of kept on spiking up and kept on spiking down, which drew this big Broughton wedge out here. We could probably feel pretty good about getting rid of this at this point. There doesn't seem to be much use for it right now. We might come and maybe find resistance on something similar, but if that's the case, we can redraw when we get closer. The important thing to look at here would be what we have over here, and this is a symmetrical triangle. So this is coming range, dump, a little bit of a lift sideways, right? Pump, and then a slow bleed. So if this were to get right back into this range and then just be completely range bound again, that would be pretty interesting. But it's not necessarily the case. As you can see, we broke down for a little while down here, slowly worked our way back up. Sorry about that. Traded back down again. So again, we're not even in the range. Finally broke into the point where we would be considered in that range. We traded up a little bit and traded down a little bit, and again now we're trading outside of the range. So no real point in dragging the range over because we're not really playing it. What we do see is that symmetrical triangle, and you know, you got a touch and a touch obviously to form the backside of it. You rode the top halfway down, and then it looks like you basically rode the bottom for a portion of it, came back up, tested the top out again, came back down, tested the bottom again, and what we're waiting for is either a breakout north-south. Which way is it going to close, and will it close before the pattern completes? Typically, you're looking for between 50 and 75% of the pattern completion. You wanna already be out of there. You want to get that candle close up and over, or get that candle break down and south, and then you want to take that play from there if you're confident in that move. All right, so that's how the 1 hour looks. There is the cipher that I did want to show again. Let's see, what do we got here? SMA, EMA. Yeah, this is the hole. So the hole's clamping down right now. You know, you got your 50 hole and you got your 80 hole. Okay, this is 80 is the aqua, 50 is the violet, and then you got VWAP, which is the pink line in the middle. So we're trading just about VWAP. VWAP's acting as resistance. Our 50 hole is going to act as resistance, while our 80 hole is currently acting as support. This is on the daily time frame, just so you know. Things look a little bit different. Yes, that is because we are on the daily now. Okay, it's no longer the 4 hour, or the hour, or the 30-minute. Here's the cipher that I wanted to look at. So let me zoom in here real quick. This is the 1 hour chart. This is just a different look at what we've already looked at. And we looked at the range up and the range down, and we looked at the symmetrical triangle. This one is a similar idea, but instead of the triangle, I painted a wedge. I apologize for the slowness of the stream. I wanted to, come on, chart, get over here. Yeah, that's what I want. It's very frustrating. Okay, you know, it's 2019. You would think that it would work better, you know, than it does. This reminds me of some bad movie in the 80s with some better color. Okay, so with the wedge that we're looking at here, right? This is this upper green line, and this lower green line, and you can see that the price is sort of compressing, right? It's sort of getting squished into this zone. Now we did have that breakout here, and we had a pretty massive breakout here. So, but I left the wedge on there even though we broke out. Now, I did that because we're not even at the 50% mark. If this was the apex of the wedge, and let's say this is the beginning of the wedge, right? This breakout here was only not even a quarter way into the pattern. So I hung on to it, and we ended up coming back to it. All right, so we broke down through it, and then we came right back to it, broke away again, and then we traded up through it, in, and then up over it. So, you know, this tells me a few things. Could I have made the wedge a little differently? Yeah, I could have used the wicks, and I could have kept everything within the wedge. I left it just the way it was. On the downside, I did use the wicks because the trading over here was very minimal. I wanted to make sure I captured more of a pattern to give me more of an idea of where support and resistance may lie. That being said, when it came back into the wedge, now we're starting to get that little ping pong that you like to see. You know, you test the bottom, test the top, test the bottom, test the top. That's the plan. Right now, same thing as a symmetrical triangle that we drew on the other chart, which would be using this line here, and then a similar line here as well. 50 to 75%, give or take, of the pattern is kind of where you're looking for it to break. So we're 50%, at least we were about back here. We'll call 75, maybe in this zone. I mean, I'm not going to break the ruler out, but let's say on the 1 hour chart we have, let's say we have about 10 more hours in that pattern for it to break to a point where we can say, okay, you know, it recognized the pattern and it broke through. Up or down, you know, north or south, which way are we going to go? If we go up, we need to get past levels up top over here, 3717 ballpark, and then you're looking at these levels here, 3760. On the downside, of course, you're looking down here, which would be 3495. And then let's take a look at this this bullish Gartley. All right, so Gartley patterns or advanced ABCD patterns are all over the place. Sometimes they're a little hard to recognize, and sometimes they're very close to a pattern, but not necessarily a pattern. So they do follow some rules, and where one rule or one set of rules fails, another one may pick up. Where on the bullish Gartley, you would need a 618 retracement from X to A, but let's say on a crab, that retracement needs to be a 786 or an 886. Okay, so different ideas for different patterns. Anyway, we're still valid on the bullish Gartley. So from X to A, right? X can be anywhere. Okay, X can be anywhere, but it should be at a point where price reverses. So this was the bottom of trend that was coming from the off-screen side. Price reversed. It went up. The next biggest swing high is where A is. Price reversed down. Now, you would say, yeah, but price reversed here, and then it reversed here, and then it reversed here, and here, and here. Yeah, I got you. We're looking for major swings. All right, so a major swing low. There's no trading around it, okay? Major swing high. There's no higher candle near it. If I were to say this were the major swing high, well then what am I going to call this guy, right? So anyway, long story short, X to A, retracement B. Let me just draw that for you so that you know I'm not lying to you here. Okay. All right. X to A, 618. 618. Okay. Now, are we being a little bit liberal with it? Yeah. You know, we're taking a little advantage of it. The idea behind this is you could wick to it and through it, but the body cannot close past it. Okay, so we're very close. We're close enough to say, okay, we have an idea for the pattern. All right. Now, X to A, B retracement. Now what you're looking for is an 886 or they're close to retracement C, retrace from A to B. So now you got to go ahead and you got to take this puppy again, and you're going to go from A to B, and you're looking for a retrace of 886. Now you can already see on the pattern itself 836. And I'll show you that right here. 836. And that's when you draw X, A, B, C, D. When you plot it out, this will already be, that number is dictated to where you move C around. And if you don't believe me, which, you know, we need to have a better relationship. You need to believe me. I mean, it's fine if you question me, but I mean, come on now. Anyway, so, you know, I'm moving it around, and you can see it's changing, you know, 9, 5, 1, 1, 0. And you can see the 836 is staying because I haven't let go yet. So when I let go, right now we're at 9, no, well, hold on. We got some lag, 7, 7, 1. I'm going to let go. We're going to wait 10 minutes for this thing to recognize that I let go. Come on, buddy. Oh, I'm sorry. I did lie to you. No, I didn't lie to you, but I moved the A, B, C, D, and not the X, A, B, C, D. Okay, so here we go. There you go. You see the movement? You see what we got there? Okay. Yeah. I was gonna save this for the end, but since I already messed that up, let me just go ahead and mention it now. In every Gartley, butterfly, bat, crab, deep crab, cipher, in all of them, they're all advanced ABCD patterns. ABCD patterns being the purple that you see here and the one that I screwed up and touched before. So they'll all have an ABCD to them, and that is why the pattern, when you go to draw it out in Trading View, you'll see XABCD. There you go, XABCD. Okay. This song is Autumn's monologue. This was the track I was talking about. So X, man, the lag is. I'm gonna be talking about that, you know, forever. X to A. Now you can see the numbers right there, right? So if I want to draw a perfect one, just knowing the numbers, I basically want this to say 618, right? And I just passed it. But whatever, you know, I don't want to waste time here. But you get the idea, all right? So you're gonna plot this down, XABC, right? It's supposed to be an 886. Let's get close. It's a little too far. Close. 895. We'll take it. Okay. And then D is actually a 786. Alright. But I'm going to show you something with that in a second. Alright. Oh my goodness gracious. Oh my goodness. Come on. There you go. Close enough. Okay, so this would be considered a bullish Gartley pattern. Alright, now I know I wasted all that time. Apologize. Alright, anyway, let me get my... So the purple is the ABCD. ABCD patterns typically mean that the move from A to B equal the move from C to D. Alright, so this move, A to B, should be the same length as C to D. Okay? Same length as far as if we were out of log. Alright, and then you were just going dollar by dollar here. So if this was a $100 move, this should be a $100 move. Alright? So anyway, now we have our C, right? We wanted 886, we got 836 again, pretty close. We didn't tap into it. Body certainly closed well under the 886. Body actually closed well under the 786. Okay, but we went by peaks here, and on the actual wick itself, we're good. Now the projection is a 786 of the whole move. Okay, or a 127 extension of oh boy, man, my mind just collapsed. That's crazy. That is crazy. Well, let me show you the X to A first. Okay, so X, we're back down here, right? X to A, this is the whole move, right? And the full retracement, right, would be back to X, right? 786 is where the target is, okay? Or a 127 extension from the CB back to C. So let me show you that real quick. So we grab our extension tool, and we're going to go C. We're going to go to B. Come on. And we're going back to C. And I just drag it over a little bit because this way you can still see the lines. Okay, so back to C. And you can see the 127 extension is pretty far above our target area down here. All right, but this would be something that you can map out. See how you have this zone that I have here? If you wanted to, and I'll do it right now on the screen. See now, how did it get all the way? I'm nowhere near that. Dude, back up. Anyway. Here's the 127. So 34.27 on the 127. The 786 was approximately 33.58, and I gave myself a cushion zone down 33.20-ish. If you were to trade this, now I know we just took this massive dump down, but if you were to trade this, this is a bullish pattern. All right. The idea is that even though you failed to make a new high, right, and you instead made a new low, you should be able to push this past up and over C and A, and in fact all the way up to what would be a 127 at 44.80. Okay, now that 127 is an extension of, I know, another fib level, A to D. Okay, A to D, because now that's your move. That's your whole move. That's the move you're playing. Right? And it would look to be this yellow line. It would look to be a bullish move up, past C, past A, and into the 127 extension of A. So again, if you don't believe me, right, we'll go with the A to the D, and we're looking for a 127, 127, boom. Okay, right here in the zone. All right. One more thing, and I can't remember what it was. So maybe, maybe not. Maybe not one more thing. How about that? How about those apples? Now there was definitely one more thing, but but I can't remember. Well, anyway,